All right. Today we are live, day 388. Today we're looking at adding more details, more properties to our BRRRR list. So you remember correctly, yesterday we just looked at a deal analyzing it for BRRRR in 35208. And what we've been doing is we've been adding properties to our recently listed property. And today we had another property in 3528, interestingly enough, right? So I decided to take a look at this property, 2733 17th Street West. Okay, great. And this property, let's see what's being listed for, is a 4-bed, 2-bath, 1,900 square feet. So kind of in the range of what we've been seeing in this area. And this property is in 1930. $175,000 with a pension price per square footage of $92 a square foot. This is going to be listed today, 10/22/2024. So very, very recent. This is a 0.26 acres. No. And let's see what area this is in. This is probably closest to Bush Hills and Fairview. Bush Hills and Fairview. Okay. So let's write some notes about this property so I can remember the condition of the property. This property looks fairly decent. Probably some carpet in the bedrooms. Bathrooms look fine. Kitchen looks fine. Kitchen looks great. Kitchen and bathrooms will look halfway modern with gray wood flooring, carpet still in all the bedrooms. Okay. That gives you a pretty good idea about what this property is going for. Now, interestingly enough, this is listed for $92 a square foot. If you remember correctly what we did yesterday, right? Yesterday, we're analyzing deals, assuming about best case scenario about $80 per square foot. So today, we got a property that was a little bit closer to $92 a square foot, which gives me a little bit more confidence in the numbers that we're looking at yesterday, right? So if you had to tie it all together, right? As you get more data, do you gain more confidence in your dollar per square foot? Because if this is now listed for $92 per square foot, and you believe that your property is going to get close to that amount after your renovation, obviously. So maybe you go a little bit more conservative. Now you're at $85 a square foot. That still brings your property yesterday to $106,000. Now, what does that result in on the analysis? That's about 11% return. So this new information probably correlated and supported my thesis that I probably wasn't going to make an offer on that deal yesterday because it didn't feel right. And honestly, for all that risk that you're taking off for 11%, I mean, that just doesn't seem right. So today, now that I added this property to my list, let's analyze this property as if you were just using it to buy it on the market for a long-term rental. So let's go ahead and update this address, update this. So again, I'm not rehearsing this. I'm just doing this live with you all because this is what I do every day. So $175,000 is the listing price. I'll put that right over here. Your renovations. This property probably has half the flooring that needs to get replaced. The paint looks okay. Maybe I'll paint half the home. So I'm going to do equals 1,900 divided by 2. And then for my flooring, I'm going to do equals 1,900 divided by 2 in row 90. So that's 950 square feet using $8 per square foot to do the writing. I got $5 for landscaping and I got $1,500 for the roof repair. All right. I got 2 toilets. I replaced the high pressure flush toilets, and that's all I'm going to do for this property. It gives me a 16 grand rehab total. Okay. 16 grand is my rehab total. For my monthly income rents, let's look this up on affordablehousing.com. Affordablehousing.com. We're going to go to the market rent estimator under the owner section. Okay. Put in the address, put in the bedroom count, and now we're going to see that the average rent is $1,319 for a 4-bedroom in this area. What's my property tax estimate? 141, plug that into B28. My insurance estimate is 136, so I'm going to do equals 136 times 1.2. And I'm adding a 20% premium by multiplying by 1.2 because I'm assuming that this property, the insurance estimate, is being used for a primary residence property. If you buy this for investment property, they're going to charge you more premium because they view investment properties, they as in the insurance companies, are viewing as a more expensive, risky asset. So they're going to charge you more. So that's why I'm adding a 20% premium. For my other expenses, I'm adding in 10% for my maintenance. So this is 10% that I'm setting aside every single month because these are the properties that I expect that eventually at some point I'm going to replace the roof, or I'm going to replace the HVAC, the air conditioner, the water heater, whatever it is. I'm going to have to do that. So I got to set aside this money because this money doesn't belong to me, right? You don't want a bill for roof replacement in 100 months from now for 13 grand and just to realize that you thought you were making an extra $130 a month when in reality you were not. So don't be that person. Make sure you underwrite with the maintenance in there. Then you got 10% for your property management. You got 5% for your vacancy. And now for my cash to seller, what I have here now is I'm going to say I want to do 20% down. So my down payment is going to equal to my asking price in B4 multiplied by my down payment in F19. That's B20. And then my interest rate is going to be roughly around 7.25%. That's what I'm estimating. My finance amount is going to equal to my listing price in B4 minus my cash down payment. And that's going to equal to 140 grand that I'm financing. This gives me a total cash and cash return of negative 5.9 because I'm assuming I'm going to rent this property out for $13.19, right? Writing down these scenarios. I will be negative cash for $270 a month. My cash and cash return is going to be negative 5.9. And my purchase price is going to be 175 grand with a rehab of $16,000 with a 25% down and a 7.25% interest rate. Okay, that's where I am today. All right, now that you got all these numbers in place, guess what's next? All right. Now you know that this is not going to be a deal. But watch what happens. And I'm going through this exercise because for every property, there's a price or a set of terms that makes it a deal, quote unquote. Obviously, this is not investment advice. I'm not soliciting any investments on this call. I'm just simply showing you all the work I do every single day to practice analyzing these deals. So at 150, watch what happens to this cash and cash return number in E9 as I lower this to, let's say, 100 grand, 90 grand, 80 grand, 70 grand, 75 grand. And now you know that you got to buy this property, assuming you could do a $16,000 rehab to achieve a rent of $13.19 to get 10% return. That's probably not going to be likely for this property, right? But you have this thing in place so that you can figure out whether or not this is truly a deal or not. Okay. So purchase price, 75 grand, $16,000 rehab, 7.25% interest rate. All right. So if you guys want to copy the spreadsheet, hopefully this was helpful. If you go to affordablehousing.io, not .com, go to get deal analysis tool, plug in your name, email, phone number. That's the fast way you can get a copy of the spreadsheet. I didn't make this spreadsheet from scratch. I got it from a few other folks and I modified it, tweaked it so that I can analyze these deals as fast as possible. But more importantly, the whole point of today's exercise was to show you all how I was adding to my list of comparable sold properties. Because now I got 3 properties that's been listed in the last couple of months, but I have to notice that all these properties were 1,900, 2,000 square feet. So if I have a home that's 1,200 square feet, man, that's going to be a little bit tough to comp because that's such a big variance in square footage. And as you get a bigger and bigger variance in square footage, the risk of your ARV being less accurate based on that dollar per square footage price is going to be higher. And that's something that you have to really think about it for yourself, especially given all the execution risk that you're taking on. Right? What's execution risk? That is when you are banking that your contractor is going to show up on time, do what they say they were going to do, and not find anything random behind the walls and say all of a sudden it's going to cost you 20, 30 grand more, because that's how you lose money. Right? So please have some confidence, think about what you're going to do, and most importantly, practice. All right. I hope you all copy my homework. I hope you all have an amazing Tuesday. I'll see you all tomorrow for day 389. Have a good one, everybody. I'll see you all tomorrow.